Good evening, this is Giuseppe Basile. I'm the analyst and trader. You can find at the blog FibonacciStalking.com. I also post regularly on Twitter using the @FibStalker nickname. Good evening. Today is Wednesday, the 5th, December the 5th, 2012, and it's midnight in Italy. And I'm recording this video for you. This is part of my midweek update. This is the infra-week update I only send to my newsletter subscriber. I write a newsletter and send it over on Sundays evening, and during the week I also send this video as part of my midweek update. In the midweek update I give trading plans for the euro dollar, forex currency future, and for the ES SP 500 index. Let's start. What you see on the screen is the dollar index. Particularly this is the US dollar index continuous contract. This is the daily chart, and this continuous contract is aligned to the December expiration. I want to go very quickly back and see that the dollar is in trouble here because it has a resistance level just above the highs in July at 83.80 area, and this resistance area is pushing price lower, and we saw this move lower in between July and September, and that corresponded to the first thrust higher in the euro, and we had then this correction that lasted basically almost 3 months here, and we traded to another level of resistance that I've been identifying in the last few weeks, and you can review my videos. That was the 81.60 area. The dollar found resistance at this level, not to the tick. I want to remind you that the dollar index is an index, so it does not move because of traders trading it, so participating to price, but it moves because it's a weighted index, so it moves because other currencies move against the dollar. So you will never have precise setups in the dollar, at least using my method. In the last week we witnessed this first level of resistance lining up at 81.20, lining up with the 200-day moving average, and price came down, and eventually again it was a sloppy retrace, but still it retraced into the next level of resistance in the 86.66. This level of resistance, 80.60, hit the first target in 79.80, and it's going down to the second target in 79.30. So I believe this second target will correspond to previous highs in the dollar. So what we expect here, it's a continuation lower. However, we could also have a retracement into the next level of resistance, which is in basically 80 level, 80 level. So we expect a continued move lower, and the first target will be for the dollar, the 77.40 area. The second target is lined up right with the lows of the April 2011 lows. Let's move to the euro dollar here. So the euro dollar had this last measured move lower that traded in February 134.70 area, and it hit first target in 22.77. The next setup in the sequence was violated, and is indicated the end of this move higher. And what we saw between September and actually mid of November was actually a corrective action in a bull market, as I said a lot of times. So you can go back and see my videos. That is what I've been saying for some time now. and price actually behaving at the moment, and we found this support in 2665. You can review my weekly video to explain why we traced this level from here, 121.50 level, and this level of support was confirmed with a violation with a violation of the 128.05 level, and which decreed the end of this move lower. So we are going higher, and the first target is 134.20. What is important to understand is whether we are going to respect an extension tomorrow. I think this is key, and we'll just keep moving higher into the 131.60. that would be the first target of this extension, and 132, so going above previous size if this extension keeps trading. The other option is, and you can review my trading plan as well, which comes with this video in my midweek update, and the other possibility is that we move lower into the 130.100 level of support, and this would be a good buy as well, and we could add to our position should the market move into this level. I believe the market will keep moving higher here, and that's scenario 1. But as you know, I can only anticipate things. We cannot expect anything from the market because price can do whatever he wants, so we have to be ready for any outcome. My preferred scenario is scenario 1. Another reason why I prefer scenario 1 is that the euro dollar is still moving in sync with the ES SP 500 D-mini futures, as I'll show you in a minute. And this on the screen is the daily chart of the ES SP 500 D-mini, and you will remember that I've been watching closely this level, the 1358, and this area of support held on the SP500 D-mini. It did not hold on the SPY ETF, and this is and this market was giving cross currency, was giving misleading and opposing signals here. But what happened last week, sorry, at the beginning of this week, what happened is that on Monday we broke that important level, 1419, that we were watching carefully, and it was broken with authority here. So it's possible that now the ES will just move laterally here for some time, and then eventually it will start moving higher again. I want to show you something important here on the 4 hour chart here of the ES E-mini SP500, and I'm loading the continuous contract here, and I want to show you something very important. Please bear with me while data is loading. So here we go. I want to show you that we are in a wedge at highs in the ES, and I want to show you this, and I want to use retracement to show this to you. So if bulls were to support price, they would support 1403 level, as they did at the beginning of the December the 4th, yesterday, and then again also in the morning during the session today, the 5th, December the 5th. But as you can see, during the day the bulls were not able to sustain price, and eventually price went below 1398. On the other side, as bulls failed, we would expect strength from bears, so bears should have pushed this price lower, and actually they were not able to do that, so price went above 1413. So that's exactly a definition of wedge. What is a wedge? A wedge is a situation in which there is uncertainty in the market, and if bulls are not willing or able to support price, and bears are not able or willing to push price lower, then what we have uncertainty, and this is how the wedge are shaped, and they are not triangles. They have the shape of a triangle, but indeed they show a situation in which bulls and bears are not willing to support price in their direction. So what we expect, a wedge is in this case could be a reversal figure or a continuation figure. I think it's a continuation figure here. We had this big move higher, and we are consolidating here. So I expect a move into 1403, and this level should start holding now, and then a continuation higher. That's it for today. I hope this was interesting, and I want to remind you that I'm only sending this video to my newsletter subscribers, and you can subscribe my newsletter going to my Fibonacci Stalking website. On the left side there is a picture. Signing off. This is the video of the midweek update for December the 5th, 2012. This is Giuseppe Basile. Thank you for your attention. I wish you a very good day and evening, and very good trading day tomorrow, and thank you very much for your attention. I'll see you soon. Bye bye.